We as fund managers get questions. Are the markets expensive or cheap? Should we invest more or should we withdraw? To be frank, always to have the right answer is difficult. To solve this, we have a product called DSP, Dynamic Asset Allocation Fund, which takes the biases away from the fund manager. What this fund does is, it has a proprietary formula for asset allocation into long-only equity. This consists of price to book value and price to earning for Nifty 50 companies. We have the data since 1999. According to that, it gives us an allocation for long-only equity depending upon the percentile scores of each valuations. On top of it, determining upon the market situations, taking into account momentum factor. If the markets are trading at more than 50 and 200 moving day averages, we add another 10% to the long-only equity allocation. So that's how the long-only equity allocation is judged. So no fund manager bias in that from a formula-driven aspect. On top of that, if the allocation changes, say from 30 to 40 or 40 to 10, depending upon the VIX index at that point of time, we change our allocation. It could be within 2 days to 5 days, depending upon where the VIX index is. So that's the product whereby, the biases gets away. Usually this formula, what it does is, when the markets are at lower valuations, we tend to add our equity allocations and vice versa. So automatically the answer to that question, what should we do now? The model takes care of it. That's one. Coming to how do we select the stocks of that, equity allocation. So again, my framework has been, margin of safety in terms of what you are buying, understanding the business and what risk each business has. So it's a combination of these three factors where we see over the next 2-3 years how the business can grow, what price am I paying for it, and what moats the company has been enjoying. Can it change? Can it increase? Or something can go worse? I think these are the three key parameters which how we identify stocks. At any given point of time, the equity plus ARB allocation is minimum 65%. The long-only equity allocation ranges from 20 to 90% depending upon our formula. So at any given point, 100 minus 65, 100 minus 80, the balance is into fixed income securities. So that's our DAF product for you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.